If we can pull up something like a Justdial. Justdial is in focus today because their Q4 results came out, as I mentioned earlier in this show, and the net profits have grown by 26%. We spoke to the management of Justdial as the company recorded a healthy quarter. Take a listen in. Welcome back. You're watching the Small and Mid-Cap show. I am Mahima Vajrajani. Well, one stock that is in focus for small and mid-cap today is Justdial. They came out with the Q4 results where their EBITDA improved by 17%, revenue grew nearly by 2%, and their net profits improved by 26%. To discuss more about this and to know how the future outlook of the company looks like, we have with us Mr. Abhishek Bansal, CFO of Justdial, who joins us now. Welcome to the show, sir.
Thank you so much.
Right. So my first question to you, Mr. Bansal, would be that, how has the Q4 panned out for you guys? How does it look? Did it beat your expectations? Did it meet your expectations? How has the Q4 gone by in the entire FY24, in fact?
See, Q4 and entire fiscal 24 was a very healthy quarter and year for us. I would define FY24 as a year of efficiency, wherein business delivered on most of the parameters. Specifically for Q4, we had about 16.2% growth in our top line. And very importantly, EBITDA at about 71 crores, more than doubled on a year-on-year basis. We delivered about 26.1% EBITDA margin. Broadly, the theme for last full year was that whatever growth that we see, be it in traffic or top line, was delivered with a great amount of cost efficiencies.
Understood. So now I just want you to break down some things for me. For example, I want to understand what is the mix for you when it comes to your segments like JD Mobile, JD Mart, JD Experts, JD Omni, and JD Homes.
So if we were to segregate our top line growth, by and large, about 73-74% of our revenue comes from B2C segment categories, and 26-27% comes from B2B oriented categories, which used to be less than 20% about 3 years ago. So broadly, almost entire revenue is subscription revenue that comes from SMEs, and that is how it is.
Understood. So if your 26 to 27% revenue comes from B2B, and that is one segment that I believe you're trying to scale up, what are the plans with respect to scaling up your B2B business? One thing in terms of monetization, and secondly, what will the mix be like in FY25 by the end of FY25?
Okay, so in terms of monetization, the way we look at the business is that the first goal is that overall revenues should grow. And we are targeting that for next full fiscal year, we should target to grow our top line by, say, 15% or more. Within that, yes, we do expect B2B to have a higher growth. And say in another 2 to 3 years time frame, this could form about, say, 1/3 of our overall revenues.
Okay, 1/3 of your total revenues will come from B2B. Understood. And so I also want to understand that your unique visitors have come to around 17.1 crore for Q4 FY24. Now, in terms of totality, what is the aim, the number that you're aiming at by the end of FY25 when it comes to unique visitors?
As far as traffic goes, again, the target is that traffic should by and large grow in line with the monetizations, or rather we should call it the other way around. If my traffic grows at say 15-20%, eventually it will result in 15-20% higher inquiries that we will deliver to our customers, and accordingly my existing customers will pay me more and new subscribers will come in. So this particular 170 million users that we have, our target will be that in a couple of years touch about say 200 million users or so.
Understood. So when it goes to 200 million, then will your mix change in terms of your mobile, web, and your visitors? How will the mix look like then?
So traffic wise, incremental traffic largely is coming on mobile platforms, which now form about 85% of our overall traffic. So it's this 85% maybe could go to another couple of percentage points higher, but growth is being driven largely by mobile platforms.
All right. And then, 200 million visitors, where will this take your revenue to by the end of FY25? Any kind of guidance, any kind of ballpark figure that you're aiming at?
So while we don't issue any formal guidance, but as a business, endeavor is to grow top line at 15% plus growth rates, which again should materialize from a mix of both volume additions as well as ticket size growth. For example, Q4 we had about 8.5% growth in campaigns on a year-on-year basis, another 7.5% in our realizations. On margins front, we exited the year at about 26%, and for next full year, we are targeting that we should comfortably be 25% plus. There is obviously scope for margin expansion as well, since there is inherent operating leverage that exists in the business for top line growth anyway beyond 8-9%.
Understood. So, scope for expansion in margins, I believe you've done, you've crossed your guidance of 25% margins. So then can I expect that the margins will go anywhere between 28 to 29%?
See, difficult to pinpoint because once my margins are reaching, say, even those kind of levels that you mentioned, it will be a conscious call whether to reinvest some of those margins into advertising to get higher traffic, which will aid my monetization in subsequent years. So, as and when we go into future quarters, we'll decide how and where to invest these incremental margins or retain it as it is.
Understood. And so I also want to understand that, your margins, your profits are definitely improving, but at the same time, your sales strength has been declining if you see QOQ sequentially. So one, what is the reason for that? And second, what are the plans to ramp up the same?
So on employee headcount, both in our sales as well as non-sales function, endeavor this year has been to work on productivity. So the idea is that the low yield workforce, if we can optimize it, not just in sales, even in non-sales through use of technology as much as possible, which is what is reflecting in better growth despite cost optimization. So the idea is that don't just run after higher employee count or manpower, but invest into quality resources which can deliver better outcome with lesser costs.
Understood. That absolutely makes sense. So then going forward for FY25 also your strategy will be the same. Your headcount will decline, or how does the scene look like for FY25?
So on headcount, we are budgeting in about 4 to 5% increase in headcount. But as I mentioned, that the approach will be to hire in a calibrated manner and see where there is necessity of additional hiring, and accordingly manpower will be ramped up.
Understood. And from what I've collected is that you're also trying to pilot your third-party sales. Now, I just want to understand what does this mean for Justdial, one thing, and how will this contribute or improve your revenues by?
So essentially, the idea is that at this point of time, almost entire sales that comes is from our in-house sales team. Can we explore any additional channels in certain geographies? Could be reseller programs. This particular channel of monetization will result in no or very low fixed cost addition for us, but it could be variable linked monetization that could happen.
All right. So that means your sales will go up. Is there any ballpark figure where you think that because of this the sales will improve by so and so percentage?
So as I mentioned earlier, the target is to grow overall revenues by mid-teens or higher, and it will be a combination of in-house team delivering, exploring third-party channels, and so on.
All right. And so also I want to understand that, your integration of Justdial with other, Reliance Group platforms. Now, what is the status there, one thing, and how will this overall, improve your revenues then?
So integration with group companies is an ongoing process. There are group companies with which we are actively engaging, both on possibility of traffic side engagement as well as monetization side engagement. And as I mentioned, overall target is for next fiscal year, top line growth of say 15% plus with 25% plus margins. So a combination of all these efforts should possibly help us achieve our targets.
Understood. And my last question to you, Mr. Bansal, would be that, any kind of new platforms that you're looking at, any new platforms in pipeline for FY25?
So while we have transaction related platforms that are already ready, which we can scale up at any point of time, it's a conscious call to not possibly spend advertising money on those initiatives at this point of time and ensure that the positive free cash flow generating core local search business itself be grown at a steady run rate. So that is the priority at this point of time. As and when we think that the ecosystem is right to scale up other initiatives, we shall definitely do so.
Okay, well, Mr. Bansal, thank you so much for taking out time and speaking with us at NDTV Profit.
Thank you so much.